home prices have been going up. There's a percentage of these buyers that gave up hope. They started freaking out. The fear of missing out hit their souls again. It's a head fake. It's a dead cat bounce. Please, everyone, prepare.
What's up, guys? I'm Nobody Special, and back by popular demand again, we have got my man Travis from the Real Estate Mindset is with us again, and we're going to talk again about the housing market, about some of the FOMO buying that's going on out there, about new construction, about resales. We're also going to get into some economic theory and how that might be playing out in the housing market right now. So, Travis, welcome back. How are we doing today, brother?
Jack, I'm doing well today. Happy Saturday, brother. I'm glad that our spouses allowed us to do this collaboration. I know there was some challenges there, but we did it, brother. It's nice to see you.
Yes, the wives are letting us play today. That was very nice of them. Thank you, Gigi. She's babysitting 4 kids right now.
Really?
We're doing this.
Shame on you. Shame on you.
I'll pay for it later. Don't worry. And by the way, let me also compliment you. Could you hold that up a little bit? What's on your shirt there? Because I noted that before. I love it.
Oh, yeah,
I
man.
love it. Fed up. Well said.
Thank you. But, one of the things that I learned when I went through, when I had my foreclosure, bankruptcy, and repo, man, was how important it was to lean on God and to I'm not trying to push my religion, Jack, but for me personally, I take all that stress, all the uncertainty, man, and I get down on my hands and knees and I pray and I give it to God. And that's one of the ways I live my life.
Well said, brother. And it seems like it's working for you. So congratulations for that. All right, man, let's talk about the housing market. What do you got for us today?
So, Jack, what I wanted to do today, first and foremost, man, I really appreciate you giving me the ability to talk to your viewers. And I really appreciate you coming onto my channel. I think that more content creators basically need to start working together in different niches to really understand what's going on in the economy. Obviously, real estate impacts the economy impacts real estate. So I really appreciate it. And Jack, what I wanted to do today is basically give an overall in-depth update on what's going on with real estate. All right, so where I want to start, Jack, is basically by talking about the laws of supply and demand. Obviously, the laws of supply and demand are important. And what I wanted to point out is essentially where we need to be. And basically right now, you guys, where we need to be is we need to have demand decrease. When demand starts to decrease, obviously the inventory should start to go up, prices should start to go down. But more importantly, you guys, what I also want us to understand is there are outliers that break the laws of supply and demand. And when we actually go to ChatGPT, Jack, right here, and we ask ChatGPT, which is a crazy system, by the way, I think it's absolutely insane. It's basically an encyclopedia that is supposed to get smarter. Anyways, we won't go there. But when we ask, when does the supply and demand model of the market break down? It basically says emotion. It's basically, it all goes back to emotion. Let me zoom in here so we can really get the viewers to look at this. But here's what it says. The supply and demand model of a market can break down in several situations. For example, when there is a lack of information about the market, when there's external factors that impact the market, such as government regulations, or when there are market participants with significant market power. Additionally, the model may also break down in the presence of market inefficiencies, such as market manipulation. And when market participants act in a non-rational manner, such as during bubble or crash conditions. Mm-hmm. And the reason I bring that up, Jack, is because I think it's important to understand what happened this year. Obviously, last year we had a lot of price decline. However, recently, starting about March till about a couple weeks ago, home prices have been going up. And I believe the reason that is, I think there's several reasons why people are buying, but I think that there's a percentage of these buyers that gave up hope. They were sitting on the sidelines expecting prices to drop. So when they saw the opposite happen after the bank bailout, right, the $400 bank bailout, they started freaking out. The fear of missing out hit their souls again. They got off the market. And then when we look, Jack, and we go into this a little bit deeper, and we look at Investopedia, basically there's 2 goods that they highlight as far as what breaks demand, the supply is law of demand. One is a Griffin good. The other one is a Veblen good, which is basically, and I'll read this one here. This is very interesting. Studies were done on the housing market in both of these scenarios. But a Veblen good is one for which demand increases as the price increases. So generally, when the price increases, demand's supposed to go down, right? When prices increase and demand increases, that is an outlier of supply and demand. And usually it's based on emotion. Now, this is going to basically say that prices increase and demand increases because of its exclusive nature and appeal as a status symbol. And honestly, Jack, this is not something we have to guess on. There have been studies done already on this. This one's going back to I think this was going back to 2013, but this is basically a professor at the National University of Singapore doing an analysis on the real estate market and basically the impacts of the Veblen effect, which is the emotional effect. And really what they wanted to show is if that effect caused house prices to drop further, or did that effect cause home prices to sustain during the bust period? And essentially, here's what it summed up. There was interesting correlations here, but this is what I wanted to read. These statistical significances translate into economic significances of a 15.4% change in housing premium or price, okay? 15.4% change in price during the boom period and a 24.1% change in housing premium during the bust period. Okay. So basically what that's saying is if the home prices or the premiums are built up too much on emotion, when it does bust, it could be an even bigger bust. And this is going to go on to the top percentages. It's very interesting. But in addition to that,
Travis,
it's
if I
also,
could pause you for a second
yeah.
there. When you were talking about the Veblen good, I couldn't help but think about the Chinese housing market. You know, a Veblen good, the expensiveness of the product and the status that that conveys becomes the draw. And so it departs from the tradition of supply and demand because as the price rises, demand should fall. But this is the opposite effect. And in China, one of the reasons why the housing bubble got so bad is because of the one-child policy and the gender imbalance in China and the guys competing for fewer girls. And so owning a home became a status that made you a more marketable bachelor. And so the more expensive the home, the more the guys wanted it because it made them look better in front of the ladies. It was the exclusivity, the status that it conveyed that they were buying, not the inherent value of the product. So it's an irrational behavior brought on by a dislocation in the market. And
Yes.
honestly, we talked about this last night, and I had never heard of a Veblen good before. I had observed the phenomenon, but I didn't know there was a name for it in economic theory. So this is fantastic stuff. Thank you.
And see, Jack, the thing is the Veblen good is more of a luxury item. And I believe that not all houses are luxury, right? There's some really bad houses. So then I looked at the study of the Griffin good, okay? Because like, again, not all houses are created the same. And I found this article dating back to 2013. This is very intriguing because it does mention that housing is the ultimate Griffin good. The difference really in the Griffin good versus the difference in the Griffin good versus the Veblen good is basically the luxury. The Griffin good is an inferior product. Basically, people think that it's not inferior. They're chasing society and things like that. And really, this is all leading to this right here, Jack. Okay. The reason why I'm even saying this is I brought up this article right now. I wanted to bring up this article for this explanation, even though it's about 8 months old. This is from Dr. Shiller. Okay, this is going into the FOMO, or I'm sorry, the fear of missing out, basically driving up demand prices during the pandemic. And he goes into what we can expect next. Now, really, I just wanted to summarize all this in the very bottom here. Because he makes some really good points, and this is a guy in charge. It's Case Shiller. He invented it. Very smart. But look at what he has to say. Fear of missing out has been alive and well. It is deep-seated emotion that may have no logical connection with any extreme forecasts. Most people stay in their purchased homes for many years. Their identities, their sense of meaning, their love tend to all be tied up in their home. No wonder that fear of missing out may be triggered by that thought at a time of stress that we may have just missed a once in a lifetime opportunity to afford our dream home. And I think that's what's happening this year, Jack. I think that's exactly a portion of the buying that we saw because prices didn't continue to decline. I believe this rebound right now is more of a head fake. It's more of a dead cat bounce, but because, the housing market, primary residence is known for basically poor investing. And Again, I think that the people that didn't see that continuation, man, they gave up hope. They went back in. Their emotions were out of control. They're like, oh my gosh, I just missed out on the best buying time in history, which I'll argue probably 2019, 2020 was probably the best time to buy. And they're back out there. And this goes on. One has to reflect on the swirl of emotions that affect many of us these days and recognize their legitimacy, but not overreact to high prices. Take a long time to search for a dream home, even as mortgage rates are going up. And don't forget that real inflation corrected prices may be substantially lower after this wave of fear of missing out. And other factors promoting high home prices during the pandemic weaken with time. Okay. So, he goes on to say, he goes on to say this last part. I think this is interesting. And this is really going to tell us, Jack, how emotional some of this home buying really is. If you think you are in love, so they're talking about love, right? So his thing is just use your emotion, because you ain't going to find a house right now that's based on sustainability, the equity was built on fundamentals. The only thing you can do right now is use your emotion to buy. This is Dr. Shiller, but this is what he says. If you think you're in love today with a house, okay, in love, we're not talking about price or payment or affordability. One could well argue that acquiring it right now makes sense, but this is clear only if your heart and you really in love with the property. Do you hear this, Jack? What happened to finding a wedge, finding cash flow? They're saying fall in love, use your emotion. I mean, that's a huge indication to me, man. And not only that, if I can, let me show you demand right now, because again, supply has remained consistent. Affordability or prices or whatever we want to call have been going up. Essentially, what we need to happen right now, Jack, is we need demand to go down. As long as supply stays the same and demand goes down, supply should go up, prices should go down. And I just wanted to point out, this is the most recent Redfin update, okay? Demand right now is finally, thank gosh, okay, is finally at a 4-year low. So our demand is at a 4-year low. It has finally trended down. You can see that trend down right here. And we're kind of starting at where we were at last year when we did have price decline. You can see that. You see that 125 line right there?
Yeah.
See, we're right on top of that 125 line right there. And again, that's where we were at the beginning of the year. Bank bailout came and it lifted demand up over right around here. Again, Jack, what I'm saying is we're trending in the right direction. Now, the beautiful thing about all this, Jack, is we can start to see the head fake. We can start to see that this rally is not sustainable. And we start to see that immediately, as always, in new construction. So let me pull up the map, okay? Now, the last time I was on your video, we basically looked at Texas. Now, I use this site right here, Jack. This is Lennar's website. The reason why I'm using Lennar is they have a really nice interactive map, so I can go to different states here and see what Lennar is doing. But also, what I've noticed is not all of the time, but often Lennar leads home builders with price cuts. Okay. So if I find an area where Lennar's in that area and Lennar's offering price cuts, generally, if I drive or fly into that area, I immediately notice that all of the other builders are doing the same thing as Lennar. The beautiful thing, Jack, is this just started. Last week, I think we talked about a week ago, I was really only able to find price cuts in Texas. But let me show you what I found, and let me show you what I found in Florida. And if we go to Pensacola right here, I love Pensacola, Jack. Okay, I'm a fisherman, so I go to Pensacola all the time. I mean, look at these price cuts. Look at that. Immediately, you see these price cuts. This first one is $64,000. That's what, man? I mean, that's what? Oh, that's over 10%, 13% maybe. I mean, and I scroll down, look at another one, dude. This is in Florida, Jack.
Are these all just in the last week since we last spoke? These price cuts are hitting?
I found these 3 days ago.
Okay.
I did not know this here until 3 days ago. Again, it's not in every metro area, but I wanted to point out that it is in some metro areas, and this will spread. Week over week, it's already spread. All right. So if you guys want to see, again, you go back to the map. Let me show you South Carolina. Again, huge changes in South Carolina as well. Okay. So when I click on Charlotte right here, okay, let me click on Charlotte. Look at this, Jack. Do you see these price cuts, brother? And look at this is on top of they're doing a $10,000 towards closing costs. I mean, you guys, new construction, this is what I'm trying to say, leads the way, and generally Lennar's in charge. Okay, so we see some price cuts there, another price cut here. Look at this one. That's
Wow.
what? That's a $45,000 price cut, brother. These are not small price cuts. Look
And
at this one.
last week we talked about how they were buying down interest rates to 4.25%. Now we got the big price cuts and 10,000 towards closing costs. All these gimmicks that are all just delaying further price cuts, right?
It's tainting the data, man. And then even in California, look at Jack. When I go to Central California, because I have a subscriber that lives there, and he's like, "There's no price cuts." So I just for the heck of it, I went to Central California. I was like, "Dude, what are you talking about? Look at these price cuts." So the same thing in California. And really, what I'm trying to point out here is people need to keep their eyes open. I understand that no one's going to call these shots in the housing market 100% perfectly, but nevertheless, we still have huge warning signs. And again, just look at these price cuts. So I would strongly encourage any one of your viewers that is on the sidelines or really just wants to see what's going on in their housing market, Jack, start with new construction, see what's going on with Lennar, and that might be helpful. But look at this, Jack. When we actually go into the median sales price for new homes sold in the United States, this never even rebounded. We hear on the news, oh, there's new records, but actually, when we really look at the data, there's not. Okay, it's in new homes anyways. It peaked in October at 496,000, Jack. The median sales price is all the way down now to 415,000. That is over a 16% decline in median sales price for new homes in the face of massive price cuts and in the face of probably historical buying incentives. I don't remember a time we have ever seen any insane buying incentives like this. They still can't hold their value. And it's not just new homes. Look at this. This is median sales price for homes sold in the United States. Now, here's how shallow this rebound has been. Now, I understand there has been a rebound in home values for the last 4.5 months. It has changed. I'm telling you guys now, we're headed down. But look at this, Jack. Okay, this is quarter over quarter median sales price. And I know there's flaws in median sales price. We went over that. But this is an astonishing set of data to review, because when it breaks down median sales price on a quarter over quarter basis, there is no increase in median sales price, which is really quite astonishing. In fact, if we look from peak, so it would peak Q4 of 2022. Again, this is quarter over quarter. Not the best data to always review, but I just wanted to let everyone know that saying, oh my gosh, the housing market's so strong. No, it's not. It doesn't even show increase quarter over quarter. If it was strong, it would show increase or sustainability quarter over quarter like it's always done in a balanced housing market, but it has not done that. Again, it's not the best indicator. What I also like to look at is this right here. This is the case Shiller. This is a value, indicator of what's going on with home prices. I don't like to look at this, Jack, because it is a lagging indicator. This is only going back to May, and it was updated July 25th.
And real quick, guys, you'll notice that name Shiller there again. That's the same economist who wrote that article we were talking about earlier in the video. He's the same guy behind this index. He's also the same guy behind the Shiller PE ratio in the stock market. So this is not some slug here. This is Robert Shiller. He's one of the most accomplished economists of our time.
Yeah. So, the reason I pulled this up is, I wanted to give credit where credit's due. Here's the rebound right here. And I think that, me and you probably can conclude, Jack, that most of it, not all, okay, so props to the people that did not fall into this, but most of that home buying, it had to be emotional. Most of that home buying does not pencil out from a strategical standpoint, from an investment standpoint, from it was a great deal standpoint. It's not penciling out. So I think what you see here is you see a continuation of insanely toxic demand. And I really think the bigger problem here is not necessarily the lack of supply, although that is a problem. I think the bigger problem here is the overwhelmingly toxic demand. And I think that's what we see. But anyways, moving forward, I also want to show you guys that we're past the peak of this year. And I told you guys that, I think the last time I was on your show, we have now 4 weeks in a row, or 1 month of declining median sales price. Now, here's a set of data, Jack, that I like to review because it keeps my hands to the pulse of the housing market. It's not the best value indicator, but again, it allows us to really stay on top of the trend. This is the 4-week rolling average of median sales price, and this does update daily. So this is the 4-week rolling average of median sales price. And this is the 4-week rolling average of median sales price. And this is the 4-week rolling average of median sales price. And this is the 4-week rolling average of median sales price. And this is the 4-week rolling average of median sales price. And this is the 4-week rolling average of median sales price. And this is the 4-week rolling average of median sales price. And this is the 4-week rolling average of median sales price. And this is the 4-week rolling average of median sales price. And this is the 4-week rolling average of median sales price. And this is the 4-week rolling average of median sales price. And this is the 4-week rolling average of median sales price. And this is the 4-week rolling average of median sales price. And this is the 4-week rolling average of median sales price. And this is the 4-week rolling average of median sales price. And this is the 4-week rolling average of median sales every single week. And this does follow value trends. We saw that last year. But I wanted to point out that we peaked basically right around here at median sales price in 2023 at 383,000. It has now gone down 4 weeks straight. Now, I believe we're going to end up way down here when median sales price ends, which is the blue, where the blue and the red line are ending right here. And if that happens, Jack, basically what that will mean is if you purchase from an equity standpoint, if you purchase from about right here where my arrow's at on, you're upside down in your house. So from mid 2021 on, you're upside down in your house. So the reason I'm saying that is people need to chill out. Like the American dream of home ownership is not what it was in 2020 and 2021 when equity was just shooting up. Interest rates were 3%. Right now, it's just like everyone's saying, everyone hold up. And here's another thing that I think is important to talk about. There's outliers in median sales price. Like, okay, because I get this comment, Jack, all the time. Well, the houses are just smaller. That's why you're seeing the prices go down, right? But when we look at this, this is the median pending square footage. So this is the size of houses. And what I want to point out, first of all, is that the size of the houses are really not changing that much. If anything, if we look from the start of the year, way down here, the houses got bigger. So we started this year, Jack, at a median square footage of 1647. That didn't go down. It shot up. Look, so it went from 1647 all the way up to 1727. So houses got 80 square foot bigger, not smaller. You see what I'm saying? So it is possible that we saw that in the run up of prices because the homes are bigger. The interesting thing, look at how the seasonality plays into this. Isn't that intriguing to you?
It definitely flatlined there. It was a much more pronounced top this year around. It went up and it hit its head and stayed flat.
It's so intriguing, but also, really also want to point out, if we look at year over year, houses are slightly smaller year over year, Jack, but only by 8 feet. So yeah, houses, well, I'm sorry, about, what is that? I'm sorry, 11 feet. Man, my math must be horrible right now.
A closet.
About 11 feet. So it's not a huge difference. Again, if we look at year over year, but I think it's worth pointing out. Now, here's my issue, Jack, and here's why I'm basically saying that things are not going to be sustainable. The payment to income ratio, the unaffordability, that is the biggest factor right now in the housing market. It is the unaffordability. And if we look at this chart from Black Knight right now, and it's actually higher, this is 2 months lagging as well. I hate the lagging data, but we're at 35.7% of our household median income going to paying just principal and interest. This does not even cover taxes and insurance. Now, the problem with this is people are not going to be able to afford to continue to pay their mortgage when this much of their gross income goes to paying off just principal and interest. That's when problems happen. And I think, Jack, that the biggest factors right now, again, talking about the unaffordability, talking about law of supply and demand, I think it's the two things that I've noticed, at least in Texas, that are leading price crashes. It's equity run up and it's unaffordability. And this is before, and I looked at migration, I looked at unemployment, I looked at all those things, and I saw immediately run up in equity, unaffordability. And let me show you that. And this is how we can really, really start to paint the picture of why house prices went down, even though inventory was still low. Because let's not forget, we also broke the law of supply and demand basically last year as well. And we broke it this year. There's so much. I hate the argument, oh, do you ever just Google the laws of supply and demand? Like, I wish it was that simple. It's not that simple, unfortunately. But if we really investigate this map, the places with the highest unaffordability had some of the highest price decline, Jack. And really look at the West Coast, case in point, West Coast. Perfect candidate for what I'm saying. The more unaffordable, the higher price decline. And we saw that Seattle, saw that places in Oregon. Look at all this Northern California. Look at the unaffordability. This is insane. I'll zoom in so we can see a little bit better. But look at Los Angeles, San Diego. And San Diego, I think, is an anomaly because San Diego has like no inventory, yet prices are going down. So you can't say that the laws of supply and demand work when we have a place like San Diego with like no inventory with price decline. There's something else going on here, and the name of it is toxic home buying and unaffordability. And look at Texas. Same thing in Texas. Austin has the biggest unaffordability, and the largest price decline. Look at number 2 in Texas with unaffordability is Dallas. Guess who's number 2 with equity decline in Texas? Dallas. I'm telling you, man, the unaffordability is killing people. You see that it didn't really hit Florida as much, but you see places where it is going to hit. Look at the East Coast and New York.
Yeah.
Has been on the year-over-year price decline list for most of the year, by the way, and prices are going down as far as median sales prices. I get a comment a lot like it's not happening in New York. But I mean, dude, there's so much unaffordability. But if that wasn't enough, Jack, just one more thing, brother.
Hey, Travis, real quick, could you back up to the affordability chart real quick?
Yeah.
The one with the blue and the green line on it, the one right before this.
Oh, okay. Yeah. This one?
Yep. Now notice that blue line there. That jumped out at me. The payment to income ratio. It's higher now than it was during the height of the global financial crisis.
Yes.
Homes right now, relative to our income, are more expensive, both nominally in terms of price, but also in terms of the raises we've gotten since then. Homes are more expensive than at the peak of the housing bubble. All right, and the housing bubble was clearly not sustainable. People stopped paying their mortgages, stopped paying their rent, houses defaults, and the mortgage bonds and the whole big short happened. We've all seen that. So one thing has to change here. One of a few things would have to change for that blue line to come down. Either incomes would have to skyrocket to bring the payment to income ratio down. We'll talk about that when you and I get together in our next video on your channel. All right. Or the home prices could fall astronomically, which is what happened in the global financial crisis. The values collapsed. Or interest rates would have to drop dramatically to lower the payments. All right. And typically interest rates drop because home values have collapsed or some other thing has collapsed, a banking crisis or something else. So one of 3 things is going to happen, guys. It's a mathematical certainty. Either we're all going to get huge raises, yay for us, or interest rates and home values are going to collapse. It's a mathematical certainty. One of those happens. Place your bets, folks, because that is the question of our day. Thanks, Travis. I'm sorry to interrupt you.
No, man. I hope we all get raises, to be quite frank. Now, it's not just the unaffordability, Jack. It was also the foundation of how equity was, came up. I mean, if we look at this chart again, we're going over median sales price. We're going over quarter again. And I just kept it quarter so we can see the run up in equity. I mean, you could see this really toxic run up in equity. And the people that are not, and look at this decline. That's what I'm saying. Like, you guys, hello, is anyone seeing this? Like, Crash Bro, like, how dare you? Like, you know what I'm doing, dude? I'm going to get the hats, the Crash Bro hats, and we're going to have a saying like something about saving people's money, man. That's all I'm saying, because look at that. My gosh, that is a fundamental breaking equity growth run up. It's not going to be grounded in anything that is sustainable. And look at the size of the bubble last time. So this was the great financial collapse. Look at that tiny little bubble.
If that was a bubble where you are right now, what do you call this?
People call it seasonality, Jack.
Oh, yeah.
People call that seasonality.
Okay.
Crazy.
One heck of a season you got there.
That is a heck of a season. But, the thing is, man, it's just not practical to think that won't go away. Now, I wanted to bring this article up because this article came out yesterday. This is on Boise. A lot of people have been watching Boise. I love this because the name of this article is Housing Market Head Fake. Boise slips back into correction mode after seeing a modest spring price bump. And look, that's from August 4th. That's one day ago. The cat's starting to get out of the bag, Jack. And I'm trying to do as best as I can to give people the heads up. And I really feel like by looking at this stuff and watching it, we're going to be months ahead of the media. But what I really wanted to point out is the pattern of price decline. And this is also a case Shiller. This is just in percentage terms. But I wanted to go back to Boise back in 2006, and I'll show you. Okay, so here's Boise in 2006, right here. Okay, so back in 2006, we had 4 months. You can see that in Boise of decline in equity. Kind of like what's going on right now. But 5 months. But after that, look at the rebound in price.
There's that head fake again. Yeah.
That's that. Jack, that's what I'm trying to say. Like, we understand.
Did I just blow up your spot? I'm sorry.
No. I mean, we understand that it's not the same as 2008. I never once said it's the same as 2008. But the patterns are very intriguing because we had that head fake followed by 3 years. Look at this. Look at this, dude, 3.5 years of decline.
Wow.
So then when we go to this year on the bottom here, look at this. Look at Boise starting. I mean, it already buckled a little bit here. It rebounded, and look at this decline here on the bottom line. Look at this decline in Boise. I mean, Boise is getting ripped up right now. So you could see Boise didn't even have like I said, 4.5 months of rebound. Look at Boise rebounded for 4 months. And guess what's happening, Jack? Look at that. The start, it's happening again, man.
And Boise is one of those, at risk of, I'm not trying to insult anybody's hometown here, but it's one of those second tier cities, if you will, that has been the chief beneficiary of the runaway in prices in some of the main metro areas like LA, New York, right? People have left those very expensive areas and they go to a place like Boise where they bid up the prices. So Boise has been one of those boom towns that's seen the biggest price increases. And like we saw in Vegas with the GFC and in other places like in Flagler, Florida, the boom towns are the first ones to start falling. They go first. Yeah. And that's what this is telling me is starting here in Boise.
Same thing with Austin, man. And the thing is, Jack, it's like, I understand people have differences of opinion. We both understand no one has a crystal ball. But I always like to remind people that, ask the people that bought them, right? Ask the people that have recent, and I'm not talking to people like, well, what about the ones in 2021? I'm not talking about the ones in 2021. I personally put in I can't remember if it was 2 or 3 offers myself in 2021. People forget that in 2021, Jack, there was no houses. If you bought a house in 2021, the odds are you had to settle on a piece of junk that was overpriced. Let's not act like 2021 was full of opportunities. The only thing that was happening in 2021 is we had low interest rates and equity was going up. The actual selection of houses was garbage, brother. And the thing is, again, but when we go back and we look at the home buyers remorse surveys, we can see right here how many Americans experience home buyers remorse. Nearly all buyers, and this is 2023, and let me zoom in here again, okay? Because this allows us to really take the human element of biasness out, okay? So let's say, the crash bro, the bulls, the bears, like who cares? Let's no longer listen to them. Let's listen to the Americans that just bought in 2023. Nearly all buyers, Jack, in 2023, 93% have regret about buying their home. That is up from 72% in 2022. It went up, Jack. It went up 21% this year. So
it can't really go much higher, right? There's only 7% of people who are happy with buying a house. So,
and I asked myself that, to me, what's important is like, what are the 7% of people doing right now to where they don't have regret? Maybe those are the people that actually have goals. They understand what they do want and they buy it. And I think that's what a lot of people should be doing right now. I think people, again, they need to remain on to be hopeful. Don't get stuck in this toxic narrative of home ownership. Plan accordingly. Like, what type of house? What's the size of the house? Bedrooms, bathrooms? What's the price? How much can you afford? What subdivision do you want to purchase in? What area? You have to build your goals up in order to shape your approach. And the better we shape our approach through this craziness, the better chances, the higher probability that we become winners at the other end of this thing. And that, my friend, is my housing market update for today.
That was Travis. Thank you so much. That was fantastic. And what a note you ended on there. And guys, if you are one of those folks, probably a lot of millennials, and I think I have a couple of buddies who are right here, and they've been sitting, watching, waiting. When do I buy? When do I buy? Watching homes go up in price for the last few years. Look at this number, guys. 93% of people who bought while you've been waiting regret it. So be happy with that decision that you made to wait, because chances are if you hadn't made that decision, you would be much worse off. And here is, proof right there in the pudding, 93%. And from personal experience, I bought my first house in 2006, in August of 2006, and I FOMO'd in. All right. People told me, wait. People said interest rates are expensive. People said, prices are going up, that it's going to crash. And I said, no, homes will only ever go up. They're not making any more land. There's only so much. If I don't buy now, I'll never have it. And I spent the next 10 years regretting that purchase. All the money I made as a commercial fisherman, and my God, the things I had to do on that boat to make that money. And it all went up in smoke in the GFC. So I don't want to see anybody go through what I went through in 2006 and the following few years.
If I can ask, Jack, where were you doing your commercial fishing?
I was a scalloper out of Barnegat Light, New Jersey.
Unbelievable. Okay.
Mm.
I I got so much more respect for you. I never knew that. That is brutal work, man.
Yes, it was the most fun. I hope I never have again, and
Yeah.
I couldn't do it now. It would kill me if I tried it now. I couldn't do it. I was younger and dumber back then.
Yeah. Our bodies could tolerate a lot more.
So, Travis, I want to thank you again so much for coming on and sharing your insight with us. And guys, take it from a guy like Travis, because he lives in this space. This is what he does. He spends all day swimming in this data, and he analyzes it and breaks it down, and he follows the trend. And again, you guys who are sitting on the sidelines, if you're wondering, should I have bought back then? That 93% number speaks volumes. Everybody who bought while you were waiting regrets it, except those 7% people who maybe they're the ones who love their house, like Shiller's emotional spectrum there. Who knows what's going on there? But thank you so much, Travis. I'll give you the final word. Anything you want to talk about?
I would just say, just everyone that is struggling, and not everyone is struggling, but the ones that are, just hang on. The data's on our side. What we're seeing here, in my opinion, anyways, it's a head fake. It's a dead cat bounce. All of this, all of the lack of fundamentals, all of the lack of sustainability, it's still there, regardless of timing. And we don't want to time the market, Jack. We want to just prepare to find opportunity. Luck is opportunity plus preparation. You're not going to be able to take advantage of the opportunity that's coming without the preparation. So I would say, please, everyone, prepare.
Fantastic. Luck is opportunity plus preparation. I like the formula. All right, guys, that was Travis from Real Estate Mindset. I'm going to put a link down in the description below to his channel. If you're not already subscribed to it, what are you waiting for? This guy is fantastic. Travis, thanks again for being here. And everybody else, until next time, live small and dream big.